right, you guys, you can take it away. Good morning.
Good morning. Thank you, Carrie. And thanks everyone who's joining either on the EXP Family Tree or here on Carrie's Zoom. If you're watching the replay, welcome as well. Nikki, as usual, I'll let you get right into it.
Awesome. Well, good morning, everyone, and happy Monday. A huge week this week for mortgage interest rates. We have job information and job reports coming out this week. We have a Fed meeting this week. And we have the 10-year Treasury sale this week. So what this basically means is that all these little factors that I talk about all the time, how unemployment is doing, how inflation is doing, when the Fed's meeting, all these things don't directly affect or have a direct effect on mortgage interest rates, but the correlation between these events and the way that mortgage interest rates behave is really high. So as we look into the week, we know that the first most important thing is going to be the Fed meeting on Wednesday. Normally, when we talk about this, and I talked about this Fed meeting in March that's going to happen and why that has been significant, this one on Wednesday is going to be significant because it will set the tone for what we think is going to happen in March. The Fed is expected not to do anything with interest rates on their end. They're expected to remain stable, but to give kind of an indication of what we can see in March. And when everyone's kind of expecting that first rate draw to happen from a Fed standpoint. Also, with the 10-year Treasury bond sale, this week, we will see what happens with an absorption rate. In other words, how many people want to latch on to those 10-year Treasury bonds as an investment for themselves. And that will influence what our mortgage interest rates do as well. We're expecting some good news this week. Last week was kind of just up and down, a little bit volatile with rates in the high sixes, low sevens. And we expect that to continue into this week. And then, with some good news at the end of the week. So just kind of a wait and see for a Monday and kind of see where we're at with everything. But yeah, everything is going extremely well from that standpoint, and interest rates are slowly lowering overall. So good news out there for as we head into the spring market. With that said, a couple of things that I came across this week that I want to talk to you guys about. First and foremost is when we talk about looking at available homes, places that are out there for people, ideas that people have on what they're looking to purchase. A lot of times, as you guys know, those check boxes on their list of needed items just cannot be fulfilled completely. Keep in mind, do not discount the idea that we can build those into a loan. We can build those upgrades that they want, the fixes to the property, the expansion, the additions, things of that nature. We can build all that into their loan, allowing them to have funds to do renovations, not just for things that need repairs, but for upgrades. So keep that in mind as you're heading with your buyers into this next market and saying, okay, can we purchase a property in a smart and strategic way where the equity that they build is based on the renovations that they want versus having to buy something that's fully renovated and ready to move into. Now, of course, we also have to take into consideration family situation, how many kids they have, whether they're willing to live through a renovation project or if they have another place to live while that's happening, but just really something to keep in mind. I've probably quoted 5 to 6 people right now that are looking for homes and that are saying, okay, I'm not quite finding what I want out there. Is there an opportunity for me to finance renovations? Huge, huge, huge. Also, particularly in the state of Minnesota, we have a new grant program that's coming out in the spring, and it's done through the Minnesota Housing. That grant program is going to give up to $35,000 to first-generation homebuyers. I think I might have mentioned this last week, but it's important for us to have that in our back pocket and understand what that means. First generation home buyers is anyone whose parents have not owned a home, or if their parents did own a home, that home might have been foreclosed upon. So a lot of funds available for that. Minnesota's doing it right now. I have a feeling, just based on what I've seen and what I know in other states, that other states will start to follow and have some increased grant money. Huge push, huge push this year for affordable housing initiatives, things that are going to give grant funds, more down payment assistance availability, all those things that I won't say they went away last year, but they were certainly tempered by the amount of buyers that were available last year. Now they're going to start opening themselves back up again, start lowering the interest rate, start lowering the cost of entry on those affordable housing initiatives. So also keep that in mind. Your buyer, no matter where they're at, even if they have their own down payment, there may be an opportunity for them to get additional down payment funds that'll kind of just lower their monthly payment or help them overall in a more strategic financial way. So just a reminder to keep those things in mind as you're kind of hitting this time in the market where there's some people that might be holding off on listing their homes in the spring, but you have these buyers coming in and want to be able to still purchase a home before that spring market hits. Renovation, down payment funds, affordable housing, whatever we can do to kind of help stimulate that and help put them into a position financially that'll be beneficial for them as they go to purchase their house. So yeah, those are kind of the things that I'm seeing, this week. And like I said, it's definitely a wait and see week from a mortgage interest rate standpoint.
Absolutely, I love that. So 2 quick things I'd love for you to dive a little bit more based upon what you just said. First would be, you said you're talking about 5 buyers. And you're talking about the different like renovation and that type of thing. So for all the realtors out there in the state of Minnesota, even elsewhere, what do those buyers look like? Or, is it from any part of the spectrum or the scale? I'd love to hear a little bit more about like the buyers that I'm working with. Who is this great for that I might not even be thinking about?
Yeah. So a couple of them are really move up buyers. They're having another child. They are needing more space. They're wanting more land. They are wanting to expand their family. They have different job changes, things of that, where their home is no longer sufficient for what they need. I have one client who, well established in his career, everything, he's good to go, except that he has the land that he absolutely loves, and he wants to be in this particular area with land, but he's not finding the home that is going to fit that. So he's saying, okay, can we expand this home into adding an office, adding an attached garage instead of a detached garage, adding another bedroom, things of that nature that'll fit his needs, because he understands that I know where I want to be from a land standpoint, from an area standpoint. I might have to make the house what I need it to be in order to fit that area. A lot of times, if you have, a lot of it is move up buyers, to be honest. A lot of people who are just saying, okay, it no longer fits the need of my family. And that's really a good target market. I do get a couple inquiries from first-time home buyers that are trying to say, okay, can I do a renovation? Absolutely, we will help you through that process with setting the right expectation that it is not just a simple, hey, buy this house and 6 months later you're going to have a great, property that, and everything is going to go as expected. So definitely setting up that expectation for first-time home buyers, but I don't get a lot of inquiries for that. A lot of it is really move up buyers or buyers with existing homes that are saying, okay, is it more cost effective for me to renovate, or is it more cost effective for me to sell and buy, depending on where I want to be.
Absolutely. Well, that's great. That's very, very helpful. The other thing I would love to be armed with myself, and maybe just a talking point, is you said there's just a lot more money available and grants available than there was last year compared to previous years. So as a realtor, for a talking point, why do you think that is? And if you had to forecast, when will the money run out, quote unquote?
Yeah, so those are some really big questions. Okay, so in general, when we talk about down payment assistance funds or affordable housing funds, a lot of those are pretty stable. A lot of them, a lot of states, and pretty much every state that I know has a stable fund that is directed specifically towards down payment assistance for that state. It's something that's always there. It's something that's available. It's something that funds itself, and it is continuing and recurring. What we'll sometimes see happen is certain states or counties or cities will have a surplus. And when they have a surplus, part of that surplus will end up going towards additional affordable housing initiatives, or they might receive federal funds, depending on what they apply for, depending on how much building they have going on, things of that nature. So what'll happen is we'll see, for example, this first generation grant come into play, where it's like, hey, we can offer this much money, we can offer up to $35,000 for this first generation of home buyers, and that'll just sit there until the money runs out. In a typical year, I'll give an example. The city of Minneapolis and the city of St. Paul has what's called a KEYS program. Sorry, my cat is just out of control today. They have a KEYS program that will give you up to $20,000 in down payment assistance funds. And they're two $10,000 loans or two $10,000 grants. Those monies are available right away in January. They usually run out about June or July. So if it's something that's already funded, usually it can run out June or July, sometimes even into August or September. Arizona has a great program that usually runs out about June-ish, maybe beginning of July, if if there aren't enough home buyers. But like in Arizona, that's one of the examples where the down payment assistance was there last year. However, they took it from being available to this, this group of home buyers in these capacities down to about this many people that it was available for. So they either didn't have enough funds or they wanted to restructure those funds in such a way where the amount of people that could get it went from here down to here, and it wasn't as favorable. So what I'm assuming that Arizona is going to do, and I don't have any, predictive information, but what I've seen happen in the past, if I use history as an indicator of what's going to happen, they'll start to take that amount of people that qualify or that they kind of put it into yet last year, and that'll start to grow again for the funds that they have available and how they want to use those funds. So a lot of it is adjusting for income limits. A lot of it is adjusting for the funds available. A lot of it is adjusting for how much, it was subsidized the prior year, things of that nature. So it's a very, kind of interesting time in January and February to learn about what programs are coming out and what adjustments are going to be made to certain down payment assistance programs. This year in particular, there's a huge push towards affordable housing, like I had mentioned. If you remember a couple years ago, or even a year ago, there was that wave where there was that affordable housing initiative where they took, people with lower credit scores and lower down payment and gave them a more favorable interest rate than people with higher down payments and higher credit scores. Let's just say that went over like a lead balloon. It didn't exactly work the way that they wanted it to. So now we're in the point where they have to do some more affordable housing. And so they're trying to figure out new and unique ways to lend in that capacity.
Yeah, that makes perfect sense. Yeah, that definitely didn't go the way they had planned for sure. I see a lot of agents out posting online, especially in Minnesota, about all these programs that are coming. So I guess I just really encourage them not only to post, but to pick up the phone. And those buyers are, people that they might have met at an open house or just anyone that pops into their mind. Like Carrie has done a video on when someone pops in your mind, call them. Or even if you think it could be, but it couldn't be, like, just have the conversation. I mean, posting is fantastic in getting the word out there and coming from contribution and education, but take it one step further and really start making these connections, because the point and why I asked that question is it will run out. So why don't we tap in and get our potential clients and prospects to be able to take advantage of this, and then you're the hero twice.
Yeah, absolutely. Absolutely. And, just knowing, your client, being able to, like you said, have these talking points with your clients, and then myself as a lender, making sure I set those proper expectations, not only for what the down payment assistance is, but any repayment that has to be made and setting that up for success in the future as well. That's a huge portion that a lot of people, you see these advertisements like, oh, 35,000 or 25,000. And it's like, well, you have to understand that it might come with some stipulations that you have to take into consideration.
Yeah, absolutely. I love that so much. Yes. And then Nikki, so let's say the meetings happened. It's Wednesday after the meeting or Thursday. Where can people find you? Because I know you're really active about keeping everyone up to date if they don't want to wait till next Monday.
Yes, so I will be doing updates via TikTok. It's mortgages from MN to AZ. That is my handle on TikTok. I also have it on Instagram, and then also my Facebook. I'll be sending out videos and messaging and things of that nature that talk about what the jobs thing is doing, what the interest rates are doing, things of that nature throughout the week.
Perfect. And how do they find you on Facebook?
Just Nikki Erickson, or you can find me on at Kevnick Mortgage. On Facebook as well. I have my business page and my personal page on there.
Fantastic. Wonderful. I appreciate it.
And then also, if anyone, I've offered this to other realtors as well. If anyone wants to just hop on a quick video or a quick Zoom call with me, we can do a quick Zoom recording talking about interview style, about some of these options. That'll be your own personal video that you can post out on, your socials as well, to just say, hey, this is what I've been looking into. Here's here's the 411 on grants or down payment assistance or anything else that you can think of that's available. I'm totally open to sitting on a quick Zoom meeting or as quick, recorded Zoom, so that you guys can post that out as well.
Fantastic. Talk about branding, co-branding.
Yeah, there you go.
Oh, absolutely. On live or listening to the recording. Nikki, how do they get a hold of you to do that?
They can either call me, text me, 952-484-1584. You can find me, like you had mentioned, online, or you can email me at nerickson@loandepot.com.
wonderful. Take advantage of that. Imagine what you'll show up as, not only posting, but having an amazing video, or even having that to send out to individual clients or prospects.
Absolutely.
Like, I had to send this to you. Look me up for more details. I mean, so powerful, and a good way to get on video, because I'll tell you, and I can wrap it up with this today. And I just got done. That's why I'm in my car. I just got done meeting with an agent. So many agents are apprehensive about getting on social media or video. And this is a good way to break into it, because AI is here. It's here to stay. Video's here to stay. And agents that have their whole business is based upon video. I mean, some people do this at such a high level on social media that they go into listing appointments and the people already feel like they know them and they've never met them, and they were a referral, or they were just from how well they do online and show up. So I really encourage you, if you're not already putting yourself out there, take this step. Take Nikki up on this. You don't have to do it alone. You have to do the work, but this is a perfect opportunity to not have to do it alone and have Nikki do the heavy lifting for you. But start getting comfortable being uncomfortable, because you want to kind of keep up. And I know this can be done many, many ways. I coach that all the time. The biggest thing is consistency. So if it's not video, really, really decide how you're going to do this, and just do it consistently, regardless of how you feel, regardless of the results today. If you do it consistently, the success will come. But if you stop, or this doesn't work, and you have this, and if I can help in any way as well with video, I'm happy to, but for sure, take me up on that. That's phenomenal and amazing opportunity, especially for agents that are really not wanting to do social or video.
Yeah, absolutely. I will tell you, I started doing videos about a year and a half ago, and I look back on some of the videos that I did a year and a half ago, and I was like, wow, how far I've came in such a short amount of time, just with being comfortable online and being comfortable with sharing, videos and who I am and letting my personality go into those things, has been quite an amazing change if I look back. And I promise you that if you get started, it's gonna get easier and easier and easier over time.
Yeah, I love that. That's such a good point, because every single person that I've watched, like on YouTube or something, because I started a channel, every single one of them that are blown up and just amazing and do these phenomenal videos, not one of them will say it started like this. Every single one of them say my videos sucked in the beginning. Horrible. I'm embarrassed. Like, everyone's got to start somewhere. So just start. Love that.
It's true. Start somewhere, fumble over the words, say all the things, and have to repeat yourself and do the stuff, because I promise you, over time, it'll just get easier. It's less mistakes. It's less, worrisome. It's less anxiety producing. It's kind of just that exposure therapy to give yourself on it.
Absolutely. Well, wonderful. Well, I know I'll be checking you out either Wednesday or Thursday to see what happened. I'm not going to wait till Monday, but come back next Monday too, because I'm sure we'll have obviously another really great Monday call. So Nikki, appreciate you so much. Thank you. Let us know if we can be helping in any way.
Sounds great.
All right. Bye, guys.